Gemini Exchange just dropped a huge bombshell for all XRP holders with the new XRP credit card, partnering with Mastercard that's being launched on August 25th. In today's video, we're going to talk about why the cryptocurrency market continues to dip, why you should be buying the dip based off of all the catalysts that are forthcoming for the cryptocurrency market and XRP. Guys, this is absolutely massive. So remember, as always, never financial advice. Just trying to put you guys on the plays that I'm in. If you're new around here, smash the like button and also consider subscribing to the channel. So the overall market is correcting. That is 100% a fact. I'm not here to say anything otherwise. But I see this as a buy the dip opportunity. We needed to see a pullback after the market was getting extremely hot. We saw XRP break above 368 just a month and a half, 2 months ago now. Ethereum broke over 4750, going towards its all-time high, which acted as resistance. Bitcoin 124K just last week, and now has since dropped and corrected right around 5 or 6% in the last 7 days. But let's go ahead and talk about some of the catalysts that we should look forward to for XRP and why I'm not worried with the fact that we are down on the day, on the week, and even on the month. But always, when in doubt, remember to zoom out. Gemini Exchange, prepare your bags. This is over in New York. It looks like it's one of the corner spots. Gemini put up an ad, XRP X Mastercard, August 25th, 2025, 4 days from today, meaning Monday next week. We have a lot to look forward to. The implications of this are absolutely massive. And you could see the placement at the southwest corner of 29th and Broadway in New York, New York. So guys, this is exactly what I'm talking about. The real world use case for XRP, how it's going to be taking over all of the banking infrastructure. And it starts with through the web bank itself, where we're going to be able to start using our XRP via credit cards to make real world transactions, which is going to create a significant FOMO. It's going to create a FOMO momentum from both institutional and retail investors. This is massive. So make sure you guys pay attention to what I mentioned in the rest of this video and what are we looking forward to towards, again, tomorrow being Friday, August 22nd, where the Federal Reserve is going to be coming out in Jackson Hole, Wyoming, to discuss the moves that they're going to make in terms of our macroeconomic climate and what to expect moving forward. Right now, the markets are pricing in maybe even no Fed rate cuts for the next month, but I think there's some discrepancies that we need to pay attention to. So before I dive in, you guys know I always like to show my XRP position moving forward. So right now we are sitting at $15,526.11, 5393.6 XRP in my iTrust Capital portfolio. I have other positions of XRP, but I'm going to ultimately put them all into my premium custody account. There's always a link down below if you want to use iTrust Capital. That's where I store my crypto for my XRP holdings. And again, I always preach time and time again, if you guys want institutional grade custody, what BlackRock is using with Coinbase in their institutional accounts, what all these other big players are using like Fidelity, that is what iTrust Capital is offering, basically Coinbase prime level without any fees, by the way. There's no monthly fee, just have to deposit. There's a 1% fee as you're entering in, but when you're pulling out your crypto, and you can just leave it in there to grow time and time again without any monthly fees. So check out the link down below. $100 is waiting for you. Watcher Guru. The odds of the Federal Reserve lowering interest rates in September fall to 57% when they were at 96% just a few days back, according to the crypto prediction platform Polymarket. We know that now it's a coin toss. If we go one way or the other, we can expect some significant volatility. If we see the Feds decide to cut rates and Jerome Powell comes out dovish tomorrow and during tomorrow's meeting, we then flip bullish and the market goes and rallies to a new all-time high across even altcoins. If he comes out hawkish saying, based off PPI numbers, which is a very big macroeconomic indicator that they like to utilize at the Federal Reserve, then we can see more pain, unfortunately. But again, it's not long-term pain, it's short-term pain that will lead to hopefully long-term as a buy the dip opportunity to double down on your favorite positions, your biggest cryptocurrencies and the holdings that you have conviction in, and then ride the wave as we come back to a new all-time high. Now, why is Friday so important? Federal Reserve Jerome Powell set to deliver a big Jackson Hole speech on Friday. Here's what Wall Street expects. What Wall Street expects usually means what we're going to see in implications for the market. So the Fed Chair Jerome Powell set to deliver what is almost certainly and will be his last keynote address at the central bank's annual conclave during one of the most tumultuous times in history. Amid several controversies, Powell could use the speech to at least take a sideswipe at the political distractions, even if he holds to past practice of not taking direct aim. The speech is billed as an economic outlook and framework review, indicating Powell will take time to provide his views on broad conditions as well as discuss the Fed's long-term policy goals. So Federal Reserve Chairman Powell is going to be the one who can make or break the markets because the Fed Reserve has what it takes to really push us forward or pull us back. What's at stake is near-term sentiment for financial markets, the longer-term path for the Federal Reserve policy trajectory, and a not insignificant dose of trying to preserve vestiges of independence at a time when the normal, sacrosanct institution is facing enormous political pressure. If Friday's speech at Jackson Hole, Wyoming goes like Powell's first 7+ years in office, it will feature a calm and collected veneer, even if masking the weight that he and his colleagues have been under all year. Because you guys got to understand and realize, why is it so hard for Jerome Powell to just cut rates and make everybody happy when it comes to the retail side of things, the institutional side of things, the financial market side of things? Because you have to understand that they have almost an impossible job right now. The job market was doing very well. Inflation was being extremely stubborn and did not want to come down at the pace that they wanted it to, because ultimately that is all they care about. No other metric in their mind matters more than inflation, because if things become hyperinflationary, what happens to the dollar? It continues to weaken and potentially become diminished. That's what can happen in any different economy. So for them, it's not about pumping the markets. It's not about them seeing things break new all-time highs. What they want to do, regardless of whether we like it or not, is make sure inflation stays down and does not fly rampant. And at the rate that they've been going right now, slow and steady, kind of keeping rates a little bit aggressive, but pausing them where they're at, that's what's kind of created this downward pressure overall in CPI, Consumer Price Index, and PPI, Producer Price Index. With Donald Trump's tariffs being implemented, they usually cause some kind of transient increase in these types of values, CPI and PPI, those being. So with that being said, we're at this very tough standpoint right now. The president of the United States is pressuring Jerome Powell, telling him, you are too late, cut those rates. We have Jerome Powell and the Federal Reserve not budging and saying we have to do what it takes to ensure that the dollar is secure, that the future of the United States of America is secure, and we have to make sure that inflation does not completely just go out of whack. And all of us as consumers, day-to-day living, whether it's energy, whether it's day-to-day groceries that we have to buy, whatever it might be that we're consuming, we're going to be faced to pay higher bills, which then, of course, cause the dollar valuation to continue to just run diminished. So with that being said, Friday is going to be the telltale sign. I might actually even consider going live, depending on the time that meeting's at, live for you guys here on YouTube. So make sure you guys tune in and consider subscribing. It's going to be a really tough one, but I think, again, regardless of the direction they go, this is going to be a potential buy the dip opportunity. Pay attention to the markets, look at the charts, but again, don't trade emotionally right now. I still think we have a lot higher to go. Even if it means a little bit more pain, that's okay, because we are long-term investors. I appreciate you all so much. That's all I had today. And until next time, as always, keep investing. Peace.